Hi, everyone. It's Sam here again with NATP. I am also with Eric Green. As you know, we are here for our monthly segment, Ask Me Anything. We have a few questions ahead of us today. And if anyone is tuning in and wants to ask a question, feel free to type that in the chat as well. We will be taking those on the fly. So we are happy to have you here. Eric, how are you doing today?
I am wonderful, Sam. How are you?
Good. I'm doing well. Thank you. It's a little bit warmer in Wisconsin, so that's kind of a nice treat if you're not ready for the weather yet to change. So it is what it is. So we'll just I think maybe we froze Eric.
Yeah.
Oh, there we go. Okay, great. So we will just dive right in. The first question that we have today for our Ask Me Anything series, Eric, just to recap, representation. We're talking all about representation.
Right.
First question. Eric, I want to file an offer, but the IRS has not processed my client's missing tax return, 17-19. Any advice?
Yeah. As we all know, the IRS claims they are opening all mail timely. I think that literally means ripping it open but not doing anything with it. So what's happening is, as the person has pointed out, they mailed in these returns because I don't think you can e-file 17 anymore. So they were probably mailed in, and they want to file the offer. If those returns are not in the system, the offer unit will reject it because you're not in compliance. In order to be compliant, you have to file all your returns. Here's what we're doing. In this case, what I would do is have signed copies. And the reason they need to be signed is I would do the offer package. In the cover letter, I would explain all the returns have been filed. We're not sure if they've been processed yet. So we've included signed copies with the package. That way, the offer unit, when they get it, because normally they try to get rid of these things. So they'll log in, don't see the returns. That's easy. Get rid of it. They're not in compliance. Now, you've said we filed them. And in case they're not in the system, here are signed copies, which means the offer unit has to accept them. They're signed. And then they can send them for processing and continue with the offer. So whenever you have that, where you're trying to do an offer and there's some hold up somewhere else at the government, tell them, include it, and send it to the offer unit. If they have it in hand, they can go forward with the offer.
All right. Second question. Eric, I heard your podcast where it's all your fault. Do you really believe that bad employees are your fault?
So yes, in this case. So Sam, for those folks who don't listen to the podcast, I did a podcast, and it's literally all my fault. It's the most recent one, and what I talked about was I began getting work product from my staff that really was not up to snuff. And I got very annoyed about it. And I came home and I got, steam coming out of my ears. Like, how can they give me this? The offer's all screwed up. The letter is like nonsense. And we don't have to get into the details of it, but there's a former Navy SEAL that's written about extreme ownership. It's a best-selling book named Jocko Willink. And I happened to see it, and it kind of struck me. And I said, this is my fault. I have failed to train my people properly. I do all of this training, NATP, Tax Rep, but I've been so busy, I have not focused internally. And so my advice on the podcast was, look, if you are getting that kind of work product, the first step is to look at yourself. What have you done? Have you trained this person, or have you just kind of thrown them in and hope that they figure it out? So listen, there are bad employees. There are people that ultimately, after you've made the effort, they can't do it. They've got to go. But initially, I think you need to look at yourself. Have you done what you need to do to make sure your team is ready to go? And in my case, I didn't. And so I think it's about taking ownership with what we've got going on. So if your practice is not functioning the way you want it to, whether it's tax preparation, representation, planning, whatever, I think the first step is to step back, look at what you've done, and have you set them up to succeed. And then that's where I would focus. If you do that and they still can't do it, well, then now I would agree that if you have a bad employee, you have a bad employee, and sometimes you have to separate and move on. But initially take ownership and make sure that you've done what you need to do.
Well, and a little bit earlier, you and I were talking offline about burnout. Do you think that is kind of a symptom of burnout as well? You know, people just don't have enough time to dedicate.
I think it depends what the issues are. If things were being missed, I could equate it, because I think we all feel a little bit, especially after tax season, but I think a lot of us feel burnout just because with COVID and working from home. I don't know about you, I feel like I'm on 24/7. If it's blatant, they don't seem to know what they're doing. That's different than burnout. That is, Eric has not trained them properly. But yeah, no, I mean, I would look at symptoms of burnout. And if your staff has just killed themselves for the end of tax season, it might be good to take a step back and make everyone take a little vacation time.
That's great. That's really great advice. The next question we've got today: my client needs to get a lien release to sell their home, and there is no equity in the home. Should they file bankruptcy? This probably is a more common situation than not, I would imagine.
Yeah. So here's the answer. Should they file bankruptcy? If they have all kinds of other debts and they need to go bankrupt, then you can go bankrupt, hand the keys back to the bank, and walk away from the house, and you don't have a cancellation of indebtedness issue because it was done during bankruptcy. But here, if the only problem is just to get the house sold, I wouldn't file bankruptcy to try to get rid of the house. You can sell the house. What happens is the IRS wants to make sure. So here's the way it works. The IRS is entitled to 100% of its interest. What is its interest? Its interest is the taxpayer's interest. They step into the shoes of the taxpayer. So what happens in that case is, if there's no equity or even not enough equity to full pay them, that's all they can get. They can only get what they can get. So what it is you do a form 14135, you submit all the documentation, the appraisal, the title search, the contract, all of that, and the draft closing statement. The IRS will confirm that there's no equity, make sure the taxpayer is not wandering off with money that it should get, and then it will give a lien discharge to the buyer, so the buyer can get good title. Now, what will happen is, with a short sale, the bank, when they write off that debt, the shortfall, will 1099-C, cancellation of indebtedness, to the taxpayer. So for those of you who do returns, just remind the taxpayer, and remember, you do a form 982 with what will be the 2021 tax return, and you can exclude that cancellation of indebtedness to the extent the taxpayer is insolvent. But yes, you can get the home sold. If there's no equity, there's no equity. You just have to do the form and provide the documentation to the IRS to prove it.
All right. Last question for today. The IRS sent a threat to levy on a return year that the client does not owe. They got a CP 2000 and we submitted the documents, and now the IRS is ignoring them and trying to collect. Any suggestions?
This is another common one, and again, because of the mail. So what happened here, Sam, is the CP 2000 is one of these proposed automated changes. Sam, look, we're requesting the backup on your charitable deductions. You diligently get it all together, mail it in. It feels like someone at the other end just takes it home, burns it to heat their house, because no one ever seems to look at it. So now what happens is it goes final. So now the taxpayer owes money. Now they have a threat to levy that's been issued saying, hey, pay us. Mm-hmm. So here's what you do. What I would do as far as for this taxpayer is we would file what's called a doubt as to liability offer. It's a 656L as in liability. And this isn't about ability to pay like a normal offer in compromise. This is an offer in compromise that says, hey, IRS, you should settle this because we don't owe you the money. And so what I would do here is I would submit the offer. If you really don't owe them anything, you have to offer something, offer $1. All right. And submit all the same documentation and the CP 2000 notice and a copy of what you sent them, and say, we submitted this. It appears no one looked at it, but the taxpayer does not owe you the money. What that does is that offer will stop collection. So there shouldn't be any levy action, and it will force a human being to review it, because that's what we want. We want a human being to open the package and look at it. And we get great results that way. Well, again, the two benefits: it stops collection and it forces someone to review it. Just remember, you must offer something, because what I'll see is people call me and say, well, they just returned it. I say, what did you offer? Zero. Well, you can't offer zero. You aren't offering anything. Offer $1, offer $10. But that's actually what you would do. You have to offer something. And for instance, this works. Let's say the IRS made these adjustments and say the client owes $10,000, and they really only owe $1,000. You can do an offer for $1,000. You don't have to put any money down with it. No check goes with it. You submit it. What usually happens is a human being at the other end will call you, and if they reviewed it, they say, look, I've reviewed it. I agree. Sometimes they'll say, we'll accept the offer. We say, well, should I withdraw it, or are they tricking me? The IRS doesn't trick you. If they tell you they're going to fix it, then I've never had them. But if you're concerned, when you fax over the withdrawal, what I do is I say, it was wonderful speaking with you. Thank you for helping us with this. Enclose this fax is to withdraw the offer because you explained that you would abate this. If for some reason you cannot abate it, we want to proceed with the offer. That way, at least on record, I'm not giving up completely if they change their minds. But I've never had them lie to me. So that's a great way to actually, again, stop the collection and force that review that you want.
Awesome. That is all the questions that we got this week. Maybe next week we'll get some more questions if anyone wants to.
I think people have been a little busy. There was something going on last week, October 15th. Yeah. So, all right, I'll forgive everybody who did not send in all their questions. But no, listen, good questions this week. Thank you.
Anything else?
You, Lashunda seemed like one of my responses.
She did. Hooray. Anything else you want to add, Eric? Any last minute advice, words of wisdom as we close out?
Take a deep breath. Try to make this the last tax season you ever work. Join us at Tax Rep. Build your representation practice. Charge more money. Work less. Make more money.
I love it. Awesome. Well, thanks for joining us, everyone. We really appreciate it. I know it's been a busy time. We've got a little comment. It looks like what was that last mentioned?
I mentioned. Okay. So Joseph, I'm not sure which one. So if it was the lien one, the lien discharge is form 14135. If it was the doubt as to liability offer, it's a 656L as in liability. So with the offers, there are two different booklets, Sam, just so you know. There's a 656B, that is a offer and compromise doubt as to collectability. That's the usual where we're calculating what they can pay and all that. Then there's a 656L as in liability, separate. It's a booklet with the instructions and it has the form, very simple form. So I think those are the only two forms I mentioned. So 14135 for liens, lien discharges, and 656L as in liability for that doubt as to liability offer.
Perfect. And if anyone is watching this and you have follow-up questions or anything after we're done going live, please feel free to email us content@natptax.com, or you can comment on this video, send us a message on social. We'll make sure that the information gets back to Eric, and then maybe we can get you an answer for next week as well. But as we close out, Joseph says, thank you. Any other parting words, Eric? Anything else? We covered a lot.
No, I think, again, I'll plug the NATP TRN partnership. There's a huge need in this area for representation. There are a lot of people in trouble. Oh, by the way, I'm going to give it to you here first. I actually interviewed Darren Guillot for the podcast this morning. Darren is the SBSC Commissioner for Enforcement. That was this morning. January 3rd, they're holding off on trust fund assessments for payroll taxes because, under the CARES Act, businesses could defer paying in over the payroll tax. That all ends January 3rd, and January 3rd, they are going after people. So he was un-Darren-like in his bluntness this morning, where he said, "Oh no, Eric, January 3rd, payroll enforcement comes back, big time." So payroll tax, sales tax, non-filers, people that want to try to settle these debts, lien discharges. There's a huge need right now. If you can do a 1040, you can do this. If you don't feel comfortable doing it, that's what the partnership is about. Tax Rep Network, we'd love to have you. And, and maybe this will be your last tax season.
Good. Well, thanks again for joining me, Eric. I really appreciate it. I know everyone listening and watching does as well. You're always a great source of information, and we really appreciate your knowledge and sharing your time with us. So thank you again.
Thank you, and we'll be back next month.
We will. We'll see you guys all then. Bye-bye.
Bye-bye.